Hello guys, what's up? My name is Ayush Khanna and you're watching our channel Ayush Khanna Classes. As you may know that May 19 exams are around the corner. So I am assuming that your preparation are going well. Okay, now in this video, from these videos, that is, I'm going a series of videos will be provided on YouTube by me about RTP of accounts and tax for CA intermediate. Okay, for CA intermediate, amendments of tax will be uploaded soon. You need not worry. So, in this first lecture of RTP of accounts, I'm going to start. And one more important thing, you should not skip tax RTP which have been released by the institute for May 2019, as the RTP have been designed very good by the institute. If you leave it, then you may be in a trouble in exams. Okay, now let's start. Yeah. First, ICI students portal. Intermediate new course and accounting revision test papers RTPs May 2019, and here's your RTP of accounting. Okay, yeah. Please don't read these type of amendments. These are not amendments. Okay. Firstly, see, accounting for bonus shares. This question is the favorite question of the institute because the institute does not have much questions for bonus shares. RTP of new course, I have this is third RTP of new course which I have seen the same question every time, and in study material also they are only in these type of questions. Okay, now let's start. Exact, these are the information given to us, and on 1st April 2017, the company has made a final call of rupees 2 each on 2,70,000 equity shares. The call money was received by 20th April 2017. Thereafter, the company decided to capitalize its reserve by the way of bonus shares at the rate of 1 share for every 4 shares held. Show necessary journal entries in the books of the company and prepare the exact of balance sheet as on 30th April 2017 after bonus. Okay, now let's start. Question number 4. Question number 4. In the books of Extra Limited, journal. First entry, bank account debited. Nice, sorry, not bank account. Equity share capital account debited. Equity share final call account debited. 2. equity share capital account, write the narration, 5,40,000, 5,40,000. Second entry, bank account debited to equity share final call account, 5,40,000. Firstly, as you may know, that we have to, if the shares are not fully paid up, then we have to first convert it into fully paid up. Then we will pass the entries of bonus shares. Okay. Next part. Third. Third entry. Authorized. Yes, just see. The company decided to capitalize its reserve of bonus shares at the rate of 1 share for every 4 shares held. Okay, for every 1 share for 4 shares held. Now see how much uh, how how much is the number of equity shares? 2,70,000. 2,70,000 into or you can divide 2,70,000 divided by 4 shares. 67,500 shares of rupees 10 each. That is 6,75,000. Okay, 6,75,000 is the amount of bonus shares. Okay, is the amount of bonus shares. Next entry. Now the entry would be securities premium account debited, general reserve account debited, and profit and loss account debited to bonus shares. Okay, 6,75,000 here. Next, securities premium. First, 1 lakh, 1 lakh, general reserve 3,60,000, and balance by profit and loss account, that is 2,15,000. And you know that the amount of bonus shares is transferred to equity share capital account. Amount 6,75,000. Now you can prepare the balance sheet by own. Okay. Next question. Question number 5. A company offers a new shares of ₹100 each at 25% premium to the existing shareholders on 1 for every 4 basis. The cum right market price of a share is ₹150. Calculate the value of a right. The institute have no good questions. They keep repeating they keep repeating they keep repeating the questions again and again. Now, the x right value of shares would be x right value of shares. I'm at question number 5. Would be x right value will be equal to rupees 150 into 4 shares, 4 shares plus 125 into 1 share divided by 4 plus 1 shares. Okay, 4 plus 1 shares. It would be Let's calculate from the calculator. 150 into 4 plus 125 equal to divided by 5. 145 shares. Sorry, 145 rupees. And value of right, value of right is 150 minus 145 rupees 5. The question is finished. Very lengthy and very difficult question by the institute. We couldn't solve it. Now let's see. Question number 6. Redemption of preference shares. The capital structure of AP Limited consists of 20,000 equity shares of rupees 10 each, fully paid up, and 1,008% redeemable preference shares of rupees 100 each, fully paid up, issued on 1st April 2001. Okay, undistributed reserve stood as GR 80,000, PL 20,000 investment allowance reserve, out of which rupees 5,000 not free for the distribution as dividend, rupees 10,000 cash at bank amounted to 98,000. Preferred shares are to be redeemed at a premium of 10%, and for the purpose of redemption, the directors are empowered to make a fresh issue of equity shares at par after utilizing the undistributed reserve and surplus, subject to the conditions that a sum of 20,000 shall be retained in the general reserve, which should not be utilized. What do you think? The question is very difficult. The question is very difficult. Okay, now let's solve the difficult question. Question number 6. Firstly, we have to make the preference shares due. First entry, 8% redeemable preference share capital. Preference share capital account debited rupees 1 lakh. Then premium on redemption account debited 10,000 to preference shareholders, to 8% preference shareholders account 1,10,000. Okay, now they decided to issue a fresh equity share capital. The entry for the same would be bank account debited to equity share capital account. Now, what would be the amount of equity share capital? Anyone? No? Okay, I'll tell what is the amount. Okay, see, what is the, let's see, general reserve 80,000 is the amount, out of which rupees 20,000 is to be retained in general reserve, that is 60,000 rupees, 60,000 general reserve. Okay, and profit and loss account amount 20,000, amount is 20,000, out of which rupees 10,000 is kept aside for premium on redemption, for letting of premium on redemption. Okay, 10,000 for that, and investment allowance reserve, out of which 5,000 is not free for distribution as dividend. Rupees 10,000 is total, so the balance is rupees 5,000 of investment allowance reserve. Total general reserve 60,000 plus PL 20,000, sorry, plus PL 10,000 plus investment allowance reserve 5,000. Total 75,000 is the CRR. That means if the face value of redemption is 1 lakh, 75,000 is the utilization of reserve, then the balance 25,000 is our equity share capital. 25,000. Now third entry, general reserve 60,000, profit and loss account 10,000, and the securities premium, or not security, investment allowance reserve 5,000 to CRR 75,000. I think there would be no problem till here. Investment allowance reserve rupees 5,000. Now 2-3 entries more. Firstly, we have to write off premium redemption. We have to make a payment to preference shareholders. And the question is, the journal entries are finished. Okay, and the journal entries are finished. And the 2 entries more, you can do that. Now, any other further question? Okay. Now, in the next video, I'll make you solve the questions of financial statement of companies. Question number 1 and question number 2. Okay, question number 1 and question number 2. Done in the next videos. And we'll be uploading soon what tax amendments. Okay, there are not much amendments in the tax subject, so need not worry, you can do it. Yes, and yes, in 1 or 2 days I will be uploading deductions from gross total income lecture in approximately nearly 60 minutes. This is the approximate time. I will be completing the whole deductions in short notes. Okay, in short, I'll try to memorize whole deductions to you. Okay, in just 1 or 2 days. Okay, and do join my Telegram channel for daily MCQs and daily test. Okay, I will be giving the link of my Telegram channel in the description and comment box. You can join from that. Okay, thank you, take care, bye bye, and do like, share and subscribe my channel for further free classes and notes. Thank you.